This week NQ is at all-time high, JOLTS on Tuesday, NFP on Friday. This is the hardest week of the month to navigate on a funded account, and I'm going to show you exactly how I plan to trade it and the reversal signals I look for. Welcome to the Displacement Diary, documenting my trading journey one trade at a time. Before analysis, some of you are new here. Let me tell you exactly what's at stake. This is an FTMO 100k funded account. I need to grow the balance to 105k, and I've got 12k to meet the target in order to pass and get paid. The account has a 10k maximum drawdown and a 5k daily limit. 3 weeks ago, I nearly blew my account. One session on a Monday wiped 4.9k in profits. The buffer, which is the safety margin between my balance and the drawdown limit, fell to just 1.7k. I was one bad day away from losing the account. However, subsequently, 2 weeks of disciplined trading, small lots, no revenge trading, the buffer grew from 1.7k to 2.8k, representing a 63% growth in 2 weeks. Not from trading bigger risks, but from taking the right ones. This week is one of the most important weeks of the month to get right. We are in the first week of May, and that matters. The first week of the month is where institutions can engineer a monthly discount Judas swing. Price can move lower early in this week to trap shorts before the real direction is delivered. This week is front loaded with JOLTS on Tuesday and is backloaded with NFP on Friday. Wide range moves early in the week are not uncommon, and that is precisely what I will be monitoring. But before I get into the charts, if you are new here and some of the ICT terminology is unfamiliar, there is a free glossary of terms in the description. Download it. It will help you follow the analysis throughout the video. Before the individual time frame analysis, two important context factors are carried over from last week. First, SMT divergence. The Dow failed to make a higher high while NQ and SPX made higher highs. Now, the Dow is not the most reliable benchmark, but when the weakest index diverges from the stronger ones, it is a signal to exercise caution over sizing on long positions at current levels. Secondly, the dollar index correlation is correct with NQ and SPX making higher highs and the DX also going up. That is not the normal relationship. When the normal correlation breaks, uncertainty is elevated and we trade with smaller size until the picture becomes clearer. Now the dollar index, and this matters for NQ traders because the US dollar direction affects the index momentum. So on the monthly, April created a lower high and a lower low compared to March. This is a bearish structure. However, the most important thing is that price is currently sitting at the 50% of this dealing range. The candle body has not yet closed below the 50% line, and you need a daily candle next week to close below the 50% to confirm the bearish momentum. On the monthly chart, these two volume imbalances, that one, they are nested, and that one held price below, and price closed above the 50% line, and also the volume imbalance below there also repelled price, and that gives mixed signals because you'd want price to close below the 50% and below this volume imbalance to make its way down to the sell side to confirm bearishness. On the daily chart, a bearish order block, which are those two green bars, formed with a fair value gap, and that is bearish structure. However, this volume imbalance repelled price, and I need to see a body crossing and closing below the volume imbalance. Now to NQ, and the monthly picture is bullish. Price closed above these relative equal highs monthly, and that is a strong signal for bullishness with this wide range body above the relative equal highs. And we can see the beginnings of a potential bullish order block, these two black bars forming. However, we will need to see a fair value gap forming between these two areas. Here is the important nuance for this week. Just because the monthly is bullish, it does not mean I am looking to buy blindly at all-time highs. It is unreasonable, and it is possible to anticipate that the monthly candle forms a discount wick, which is a bearish shadow for the month of May. And ideally, if that Judas swing respects this 25% level of this April bar, that is the level I want to see being held for a strong bullish continuation. Now, on the left is NQ weekly chart, and on the right is the daily chart. So, price closed above the midpoint of Q2, and that is bullish. And we also formed a fair value gap above the relative equal highs monthly, and that is bullish momentum showing there. The focus for next week is the midpoint of Q2 to the midpoint of Q3, but paying particular attention to this half standard deviation, which is very sensitive to price. Price can either zoom past that level or repel it. This is the most sensitive level on the chart right now. I'm not chasing it. I'm watching how price reacts when it gets there. Now, the May discount Judas caution, I will allow for and even expect a Judas swing down to the Fib 125%, or even this fair value gap is still in play and a potential for a retest before price goes up. These are not reversals. These are opportunities. On the daily chart, the bullish structure is remaining intact. A bullish suspension block there was formed tethered to this bullish order block on the daily chart. And crucially, this is all within the second quadrant Q2. and price is making its way towards the half standard deviation. A discount Judas swing next week that comes to retest the bullish order block is permissible, and I actually anticipate that. However, on a daily candle, if price closes below this bullish order block or that bullish order block, potentially we then see a bearish breaker forming, and that is concerning for the bullish bias. And at that time, I will reassess the situation for the bullishness, but at that time I'll now be looking at price going bearish, particularly if we close below the monthly relative equal highs. So how do I plan to trade this week? So let me walk you through the two scenarios and the key levels between them. So starting with scenario A, the bullish continuation. So the Judas swing, if the Judas swing holds the Fib 125% level and the BC on the weekly is respected on retest, and the 25% level retracement on the April bar acts as the floor. If all these hold, my targets are the Q2 midpoint through to the Fib 150%, which is the half standard deviation. The key levels to watch in between are the 125%, which is the baseline, the 137.5%, which is the Q2 midpoint, and then the 150%, which is the half standard deviation, and whether price zooms past it or repels it. So the April 25% retracement on Nasdaq and the dollar closing below the 50% fib are the confirmation triggers for buys. And my my trading sessions remain the London Kill Zone and the New York Open primarily, using low lots until the confirmation fires. I do not chase, I will wait for the market to tell me the direction. Now, scenario B, which is the bearish reversal signal. If the daily closes a body below the first bullish order block, I reassess. If the second bullish order block is breached, that is a strong signal for a bias shift warning. I'm not predicting this, but I am prepared for it. I do not assume the bullish scenario just because the monthly is bullish. I wait for the confirmations. The confirmations are the edge. Now, that is the 4-week ahead analysis for May the 4th to the 8th of 2026. I will not pick the NASDAQ tops at all-time highs. The confirmations will tell me when it is time. Until then, process over outcome. Subscribe for the weekly review every weekend. Download the free ICT glossary in the description if you are new to these concepts. Like and share if this helped you. Nothing in this video is financial advice. This is my personal trading journal for educational purposes only. See you in the markets.